Yes, welcome back here to the FinTech and Dreams track on the Copenhagen FinTech Week 2020, second day. The next session here is an introduction to the Nordic impact fintech and investment scene. The session is organized by Richard Engström. I will welcome him in a second. Richard is a good friend of the house here in Copenhagen FinTech. I think earlier we have known him from Connect Denmark and other things, but the last 5 years he has founded and he's been leading an initiative called the Initiative. I think Richard is the man to tell us a little bit more about that. But it is basically kind of a gateway for providing links between impact startups and investors in the Nordics. But I would like to welcome you, Richard, and you can tell us a little bit more about your initiative, and you will have guests from the ecosystem joining in, and you will present them during the session. Thank you.
Okay, thanks for that, Simon, and hello out there, and welcome here to Copenhagen FinTech. I'm very happy that the One Initiative can bring you some insights in the Nordics when it comes to impact business and the investing, and we'll meet some of the main players and some front runners in this area of the world. I think I like to share this for just a second because I think this is actually what's it all about. And what we have been doing the last 5 years actually to map and understand and analyze this market in the Nordics, but also rate and mature companies with our systems and then bring them together in the Nordic Impact Business Summit and other matchmaking activities. And I think the one question that the world actually points at the Nordics sometimes when you talk to people in the Nordics but also outside the Nordics is actually, could this be an epicenter for impact business and investing? And I think that is a question we can continue to talk on later on. If you look a little bit on one of the most severe studies on ecosystems throughout the world, Startup Genome, you can actually see that Stockholm is on the top 10 as a ecosystem and city on the development of startups in general, and Copenhagen is coming on in the 30s, and the last study this summer actually says that there might not be any new Silicon Valley, but another 30 ones throughout the world of ecosystems within different areas of technology. And I think that maybe you could think broader than that and say, are there new clusters that are not about cities, but maybe about areas of technology and investments? And also pointed out in the report this summer that actually there is an opportunity actually for having startups and investors in new technology to actually lower the negative impact on the world and focus on inclusion. So with that in mind, I'd like to introduce to you today some of the leaders in the region. Tove Rodenius, who is an investment manager at Nordic, which is maybe the main VC in the Nordics or in the world when it comes to investing in startups that do good. Rachel Browning has been working with the investment analysis for many years and recently last years in impact. And Nina, who is the CEO of Catapult in Oslo, which is actually rated as the foremost accelerator in this part of the world, and they've been focused for some years now and looked at over 10,000 companies with impact solutions. And also Michael Scott from Danske Bank, who is actually running the Hub, which is a larger startup platform, but also Impact Hub since 2 years, which actually compiling startups from the Nordics with impact solutions and their investors. So yeah, let's start. And I'd like to welcome first to you. Hope we have Tove with us from Stockholm.
Absolutely. Hi, and thank you so much for that very impressive welcome. I mean, we're all sitting here very flattered.
Yeah, so let me hear about Nordic. What is actually Nordic been doing the last 4 years, and what do you see for the future of this? Let's learn from you.
Yeah, fantastic. Shall I share my presentation?
Sure. You're welcome, and I hope we'll have that in a few seconds.
Yeah, let's see. Can you see anything on the screen?
I think so. I think we're fine.
Yeah, you can see the presentation. Yeah.
Yep.
Fantastic. So thank you so much for hosting us here for the first time in Copenhagen FinTech Week. It's fantastic to see that you're hosting a sustainability theme as well. So Nordic VC was founded 3 years ago in 2017, 3.5 years ago, by one of the co-founders of Klarna, so the Swedish fintech unicorn called Niklas Adelbert. And let's just see if we can get. So we often get the question, what is impact investing? That's the number one question that we get. But as you know, the world is facing enormous challenges, and the old solutions are simply not insufficient in tackling these traditional or these growing problems. So we think that you really need to have new solutions, and especially when you can utilize tech and entrepreneurship in order to tackle these exponentially growing problems. But these new solutions also need capital in order to scale. And I'm sure that most of you are very familiar with the UN Sustainable Development Goals, perhaps even read in the news yesterday about how some of these goals are, how we're failing to reach some of these goals. And one of the reasons might also be because they're significantly underfunded. We need about $7 to $8 trillion to be invested into just these Sustainable Development Goals to reach them by 2030. And that's 16 times more capital than is currently invested into impact. And it's not a lack of capital by any means. I mean, you have total assets under management in 2019 of $106 trillion, but only 0.5% of this is actually going to impact companies. So 500 billion might sound a lot, but it's by no means near. So we think that this requires a new way of investing. Historically, you've had to choose between either environmental and social benefit or by financial return benefit. But we really think that you can achieve the same and achieve financial return from social impacts. And this is what we went out to start doing 3 years ago. So what are we actually doing then, and what are we looking for? Well, impact is for us kind of the first lens. So we're a traditional VC firm, but impact is our first lens that we look through. And when we talk about impact, our perspective on impact is a company that has a positive effect on people and or planet. We use the Sustainable Development Goals for guidance. Each investment needs to tick one of the 17 Sustainable Development Goals, but of course, that's a very broad mandate. When it comes to impact assessments, we do individual assessments for each company where we look at, we use the theory of change guidelines, but we look at what's the vision if you achieve what you want to achieve, and if your product or service is no longer needed, what's the challenge? So why isn't this vision currently achieved? And how severe is this challenge? And then we look at the solution and everything from the intensity and volume of effect to who is the beneficiary? Is the beneficiary well served or underserved? What's the duration of the effect and the time to effect? And what's the contribution? And also, what is the impact risk? Because almost every impact company still bears some impact risk or potential negative risk. And we focus on businesses that are what we call the next generation business models. So where for each unit of profit generated, you also generate 1 unit of impact. So for example, say a food waste company, which is the easiest to explain, you have for each unit of saved food, you also generate a unit of profits. And it's really important for us to kind of highlight that we are a traditional VC firm. We look at everything else that...
Okay.
Sorry?
Tove, can you put full screen on your slides? It's easier for people to follow.
Yeah, sorry. It's, let me see. I can't see what you guys see. Is this better?
This is great. This is great.
Fantastic.
Continue. Sorry for that.
Oh yeah, no worries at all. And so we're looking for essentially companies with significant impact potential, outstanding entrepreneurs, exceptional product, scalable technology, and companies that have high ethical standards. We tend to talk about kind of impact unicorns. And what is that essentially? I mean, you all, most of you are probably from financial backgrounds, so you've heard about the financial unicorns, companies valued at more than $1 billion. We like to talk about impact unicorns as well, which are companies that can positively impact 1 billion people. So what is our investment focus more specifically? Well, we're focused on companies that are trying to solve some of the world's biggest problems. We have a 100 million euro fund, so it's our second fund, and we're targeting traditional VC returns by focusing on these next generation business models where proving out that profits and impact do go hand in hand. We believe that tech is not a requirement, but we believe that it's a key tool for solving the problems, but also to scale up the solutions in the time that we have. Our key focus is seed to Series A. We primarily focus on the Nordics, but we have a European or global mandate if we find an exceptional company. And our investment size tends to range from 0.5 million up to 3 million as an initial ticket, but depending on the stage. So we haven't reviewed as many companies as Catapult have, but since September 17, we've reviewed more than, I mean, now we're probably up in 2,000 companies. This has resulted in, I think we're up in 24 investments at the moment. And I always find it interesting to kind of show a distribution of which impact areas we tend to receive our pipeline. It's consistently around a third environment, but a lot as well in healthcare, social inclusion, education, impact support and finance, and well-being. And this kind of strong impact deal flow that we've seen has resulted in fantastic companies across various impact areas that we're very proud of. So when you look at impact, I think it's a bit of a buzzword at the moment, but for us, impact it's a strategy and it's built to last. It's not just a fad that is here temporarily. And we think there's several reasons for this. I mean, it's a purpose-driven advantage. A lot of various studies have shown that it's really a key for next generation success, but also key when it comes to acquiring talent and key core consumers and customers. 83% of millennials who believe that business success should be more measured in more than just financial performance. 73% of MBA students willing to take a 15% pay cut to work for a purpose-driven company. And that's something we've seen a lot with our portfolio, that the companies tend to be able to attract fantastic talent, even though they can't by any means pay as much. But also that customers or millennials in particular are willing to spend more on products if it comes from sustainable brands. So you're in a quite good strategic position there as well. And it's easy to kind of focus on the negatives, but we've seen a lot of, just since we've started, we've seen a lot of different funds pop up and family offices, and we get a lot of requests in terms of how you can get more involved in impact. And we are starting to see kind of a focus and a capital shift towards more impact. We're seeing that entrepreneurs are becoming more change makers, and according to one study, 64% of policymakers agree that actually European tech entrepreneurs will do more to address the major societal challenges than the European governments will. Might be a bit controversial. And that 84% of investors, traditional investors, say that their organization is making more impact investments compared to 3 years ago. But most importantly, I think I mentioned earlier that only 0.5% is actually invested out of all the assets under management is invested into impact. Well, that's actually a year-on-year doubling since 2018. So we have every hope and ambition to ensure to drive the capital shift even further in the future. And that's also something that we're hoping to demonstrate, and why we're so proud of having a venture capital fund that is now structured as a traditional fund, because we really want to walk the walk as well and not just talk the talk. So we're really hoping that more funds will focus on investing and supporting these companies that are focusing on tech and entrepreneurship in order to achieve impact, and that we can enable a lot more impact unicorns going forward. Thank you.
Ove Rodelius from Norrsken VC in Stockholm. We'll get back to you and have a look on how you actually assess those companies that you invest in. But let's present Mikkel Scott from Danske Bank, Impact and Growth, and the Plus Impact platform. He has a good view on actually what is happening in this startup ecosystem of the Nordics when it comes to green tech and sustainable solutions. So welcome to you, Mikkel.
Thank you very much, and I hope that you can see my screen now.
Looks great.
Thank you. Yeah, thank you very much for the introduction and for bringing me along on the panel. It's a really exciting topic, the theme that we're discussing. Basically, just a short introduction. We've been working on supporting startups since 2015, and in 2018 we started having a special focus on impact startups. And I think we have very much the same definition of startups as Tove was also mentioning. Startups that have one or more of the SDGs as core to the business, meaning that if you remove the business, if you remove the impact, you also remove the business. And also this aspect about when you grow the business, you automatically grow the impact the same way. So we started this initiative on Plus Impact in 2018, and as Rikard was mentioning, we are focusing on bridging or connecting impact startups by showcasing and creating transparency about the startups in the Nordics, and helping them along the funding journey. But one thing that is part of the Plus Impact universe, that is that we are doing an annual mapping of the Nordic impact startup ecosystem. And the background for doing that is that we could see a need from these impact startups for increased awareness and also a maturing of the ecosystem to support them. And the other side of the coin, 67% of the investors mentioned that lack of past performance of impact investments as a barrier for doing more impact investment. And the rationale then being we need to create the facts and the information in order to showcase these startups, and in order to shed light on the different myths that we see in around impact startups. So what we've done is that we looked at the different impact startups, and just to showcase what type of topics are they primarily focusing on. And we do see that the Nordic impact startups, they are primarily focusing on health and well-being, and responsible consumption and production, so recycling, circular economy, and so on. That accounts for actually 42% of the startups that we have been monitoring. We've been monitoring or mapping more than 1,000 startups in 2020. Then we also see a lot of startups focusing on renewable energy, affordable energy, and climate, and then also sustainable cities. So that just gives an idea about what type of topics are they focusing on. You should be aware when we look at these numbers, if you look at the right side, that Denmark is overrepresented, and that's because we've been using our own platforms, the Hub and Plus Impact, for the majority of the data. And here we have a bias towards Denmark. I think that looking at the complete numbers, I would expect that Sweden especially is very strong in this topic. So basically what we did in 2020 edition of the mapping, was to try and address 10 myths that we see are a barrier to the maturing and the strengthening of the impact startups and the ecosystem. And I won't go through all of them, but just kind of like highlight the overall conclusions on 4 different topics: the society level, the business level, and the team, so the founder and the CEOs, and then also performance and data. I'll go a little bit into some of the data points on the business side. But when it comes to the society side, we definitely see that the Nordic countries have the prerequisites for being kind of like a stronghold, the epicenter, the potential epicenter that what Record was talking about. We see that we are ranked, the Nordic countries are ranked amongst the top when it comes to our performance on achieving the SDGs. So on a societal level, we have really a stronghold within sustainability and the Sustainable Development Goals. When we look at the startup ecosystem and the impact ecosystem, we definitely see that we have a very vibrant ecosystem, especially when looking at the per capita part, and especially we see that Sweden is very strong in this field. On the other side of the coin, we can also see that looking at the absolute numbers, London, the UK, and other major areas are definitely ahead of the Nordics when it comes to the absolute size of impact startups and startups in general. When we look at the business side, we've heard this topic about impact startups being a special breed. We definitely don't see this. We see that they use similar business models as regular startups, that they have progressed and are making both profit and impact. And when we look at the founder side, something that is also very positive is that we see more, almost half of the founders having previous entrepreneurial experience. So definitely the notion that impact startups don't have the business skills is something that we don't really see anymore. And we're happy to see that females or women are actually founders of more than almost a quarter of the companies. Still low, but compared to benchmarks, I think that's promising. And then finally, on the performance and data, we definitely see that the impact data is still in its early days. So just quickly, some small words on the business myth that we try to look into. That impact startups is kind of like a special breed, a special group, a special vertical. That impact startups, or that impact is a trade-off between purpose and profit. And finally, that impact startups are using different business models than non-impact startups. And as mentioned before, we don't see that they're a special breed. We see that they are using similar models and also making both profit and impact. Very quickly, just showcasing some of the data points. This is to understand, are they a special breed or are they actually a diverse set of different type of topics? Here we've looked at 2 different parameters. Scalability, meaning if they are high scalability, are they able to grow at a similar rate as would be expected by early stage investors, meaning high scalability, and the opposite with low scalability. That's one parameter, and the other is the impactability. So are they looking at broad impact categories like climate change and so on that affects a lot the whole globe, but it's not life-changing to the individual, the beneficiary? Or are they looking at very high impact on the individual, so life-changing impacts, but then on a smaller scale? And what we see is that 60% of them have the ability of being high scaling companies. If they do, that's another question, but they have the prerequisite for doing so. So basically, the main conclusion here is that we definitely see this scattered picture, and we definitely need to address each of the groups of impact startups in different ways. Looking at the top line or the profit and purpose, we have looked at if they use the impact for increasing the top line or improving the bottom line. So on the premium side or the efficiency side, the cost side, or if they are actually doing both. And what we see is that 89% of the impact startups are actually able to demonstrate that that profit and impact is going hand in hand while using it in different ways. Finally, when it comes to the business models, when we look at the income stream of the different impact startups, we see a lot of a similar set of the income streams that they're using. Pay-per-service as being the dominant one, but still very well represented and showcasing a similar pattern that we see in more traditional non-impact tech startups. What is also interesting to see is that the startups are definitely using tech. We see that 81% of the startups are basing their business on tech, so meaning apps, digital platforms, and so on, or more high tech or deep tech technology, so AI and so on. So again, adding to the picture that we see that the impact startups are maturing and using having a same mindset as a more traditional tech startups and using the same business models, structures, and so on. So very promising. I think that's it from my side right now.
Thank you, Mikkel, very much. We'll get back to you on more understanding of this. So let's talk with Nina, who is CEO for Catapult Accelerator in Oslo, who actually screen and accelerate impact startups from all over the globe. And welcome here. Good to see you.
Thank you. Good to see you too.
Yeah. So let's hear about Catapult.
Yes. And I will just share my screen. Just give me a second.
And I can see while you're doing that to the audience that obviously there is a chat, so you can put out some questions there, and we'll try to pick up a few of them after this. I'll guess, do we have slides through from Nina?
Yeah, they're coming.
Yeah.
Can you see the slides?
Yeah, we can see the slides. So please, do a slide on them so you blow them up in total on your screen. That would be great.
Oh, you don't see them in full screen?
No.
No, okay. You see them in presenter mode, I guess.
Right, yes.
Just a second then.
Very good. Looks great. Happy to have you here.
Perfect. Thank you so much, Richard. We're very happy to be here. So I'm Nina. I'm the managing director at Catapult Accelerator, and we are an impact tech accelerator based out of Oslo, here in Norway. And to date, we have invested in 57 impact startups from 29 different countries across the globe that are all using technology to help build the world that we all want to live in. And today I'm here to talk about how we select, accelerate, and finance impact tech startups. So just let me give you a little bit of background about what Catapult is doing and who we are. So we started off in 2017 with a grounded belief that investing in startups that are using technology to help solve some of the most pressing issues of our time is the right way forward. We believe that there's no trade-off between doing something good and doing good business. So what we are doing is that we find some of the best entrepreneurial talents out there, And we take around 12 startups at a time through our accelerator program. We invest in all of them, and then we continue to support them on their continued journey after they have been through our programs. So this is what we have done today. As Richard also said in the beginning, we have screened more than 10,000 startups and counting. We have done 57 investments in startups from 29 different countries. And next week, we are ending our 5th flagship accelerator program. And for that program, we had an acceptance rate of only 0.6%. And we have done 3 follow investments in 3 of our portfolio companies. And I'll talk a little bit more about that later. We are also part of a bigger system called Catapult Group, which is a first mover and globally leading impact tech system investing in and accelerating seed stage startups that are using technology to solve societal and environmental challenges. And also in part of this Catapult Group, you find Catapult Ocean and Catapult Foundation. So let's talk a little bit more about how we're structured and how we work and what we do in detail. So we have 3 pillars in our core business. One of them is that we find the startups that we want to invest in. Second part is that we invest in the startups and accelerate them through our programs. And the third part is that we continue to support them after they're done with our program. And we also have a follow-on fund where we're able to invest in those who are performing the best in the time after the program. So a little bit more detailed about these 3 parts. So as we've already said, we are screening a lot of startups. And for our 5th program that we're ending next week, we had 2,000 startups in our pipeline from 100 countries. It was only 11 seats in the program, and that gave us an acceptance rate of only 0.6%, which we're very proud of. And this is how the process works. So when we start to look at startups, we have an open application where startups can apply. And then we have what we call leads. So we have scouts in-house that are, crunching databases and sourcing for information on the internet and through our network to find startups that we put into our deal flow. And we also get a lot of referrals from our mentors and investors and others that are connected to the Catapult system. And then we go through all of these startups that we have in the pipeline, which was for the last program, 2,000 startups. We do a first round interview with around 150 of them. And then we do commercial and technical due diligence on around 75 companies. Then we do a second round interview for around 50. And then we do a deeper analysis of their tech, their impact potential, and their scalability of around 30 startups. And then we send the best ones to our investment committee. And then we send out offers to around 15 startups. And we ended up with 11 startups in the cohort. So what happens when they enter the program? The accelerator program that we run here at Catapult is a 3-month program. Normally, if we can say that, it's a physical program here in Oslo for 3 months. But this year, we were forced into turning our planned physical program into an online version. Even though we had all the startups here in Oslo for 3 days from March 9th, and then as the situation developed so fast, we had to send everyone back home and turn what we had planned into a fully digital format. So it was 11 startups, and connected to the program, we have around 200 mentors and experts that are contributing with their time and knowledge to help our startups grow through the program. We also invest in all of the startups with $150,000 for around 8% equity, and we have done 5 flagship programs. And in the program, for those 12 weeks when we work with the startups, we have built a skeleton and a curriculum based on these 5 thematic areas. So we work with them on what we call the impact part. It's all about the vision, the strategy, how to measure and scale their impact. And then we're looking at their growth, sales strategies, marketing. We work with them on their technology development, so product roadmap, architecture, and design. And then we support them to become even more investor ready, which is, to us super important to help them become ready to raise their next and bigger rounds after the Catapult program. And then we have the 5th part that we call body and brain, which is team and people and leadership development. So we work a lot on that. And we also do physical workouts. We take all the companies on a cabin trip into the woods to, strengthen the connection between the startups and the people, and develop strong relationships for the future. And when the startups are done, and also as Richard said, that we were mentioned on Crunchbase's global top 100 list in 2019 as the only and best Nordic accelerator. And when the startups are done with being part of our program, we send them off into the world and continue to support them whenever they need it. We have now around 6 startups that have grown to Series A rounds in only less than 3 years, so that's great. And around 50% of the startups in our portfolio have closed their next round after Catapult. We have, with our follow-on fund, done 3 investments into our portfolio companies, and we see that all of the UN sustainability goals have been positively impacted by our portfolio. And here you see 2 cases. It's also referring to what Tove said previously, the relationship between the business unit and the impact unit going hand in hand. And here we have an example, one of our Norwegian portfolio companies, Choose, and one of our Kenyan portfolio companies, FinAccess, where you see that their financial results on the graph, and you see their what sustainability goals they are working on, and also their impact measurements. And then I want to go a little bit deeper into one of our portfolio companies. So let me present to you Esusu. Esusu was part of our 3rd accelerator program during the fall of 2018. They are an American startup founded by Samir and Abby, and they are addressing a big problem, first and foremost in the US, and then they have a plan to expand to Africa after that. So millions of Americans, they stand outside of the financial system in the US. And Esusu, they're working with partners to create and build credit scores for people based on, for example, rental data and so forth, to include them in the financial system and give them access to bank loans and so forth. So Esusu was a company that was referred to us by one of our mentors. And in the selection process, they scored really high on all our evaluation criteria. They were solving a really big and global problem. And they had good traction in the market with the partners, customers, and existing investors on board. And they had a really competent and stellar team, which is the most important factor that we look for. And we're also, it's one important thing for Catapult when we select the startups to join our programs is also that, they are at the stage where we see that the content that we have in our program, the expertise that we're able to provide them with, match with their actual challenges. So we see that it's a good match between the startup's needs and what we are able to support and help them with, so that they will get maximum return of the effort that they put into the program. And as you see here on this quote, the Esusu team were happy with their participation in the program. And Esusu is also one of the 3 portfolio companies where we have followed on with our follow-on investment. We did that last year, then they opened up their seed round. The valuation of the company when they entered the Catapult program was around $2 million. And when they opened their seed round, the valuation was at 10. Wow. And they had other leading investors on board, such as Sinai Ventures, Acumen Fund, and Kleiner Parkins.
Thank you very much, Nina, for bringing all this to us. I'm looking very much forward to talk to you later on actually how you look at companies throughout the world compared to Nordic startups that have great solutions. We'll get back to that. And I'd like to introduce Rachel Browning, who is actually an investment analyst focused on impact for some years and also helped the One Initiative with our report, Impact Report Nordic Investors last year, which was actually the first survey and analyze and report on private equity investors such as business angels, family offices, and venture funds into those new companies. So welcome, Rachel. Nice to have you.
Good morning. Thank you so much, Richard.
Yeah, maybe try to put up your slides, and I can see that we hear you a little bit low, so maybe turn up your volume if possible.
Right. Can you hear me now? Is that a little bit better?
It's great, and please do a exactly.
Thank you so much for that. So I've really had a privilege to look at impact investing as an outsider and study how the industry has evolved, both from a sort of a very practical perspective, but also from an academic perspective. And it's so great to have this conversation today and get these different viewpoints in the same conversation. And dealing with this, it's easy to get distracted about impact investing and what it is and what it isn't. And it's so refreshing to see the real practical examples that have been presented today in the talk. But as an investor, what does it mean to invest with impact? And it's about intentionally improving the world through investing. And an investor has a few tools in order to do that. They can signal, they can engage with their non-financial skills, they can grow undersupplied capital markets and be also catalytic and use catalytic capital to get things done. And as the impact industry has evolved, we're starting to really better define these mechanisms for changing the world and knowing what does make an impact and what doesn't. And I come from an institutional background of ESG, and we scoured the world and looked really at the inputs and activities around ESG. And now with impact, I think impact really focuses on the outcomes, on getting things done. And recently I've seen a lot of sort of debate around how useful is ESG and where does it really make any difference? And it's great to see that debate continuing. I don't think ESG is going to go anywhere, but we're really moving to a more ambitious area where outcomes matter and impact matters, along with the inputs in the ESG ratings. And as an enterprise, this slide comes from the IMP, a great organization building consensus around approaches to impact investing. And I really like this slide, and I think it's really useful for both investors and startups, for them to really use a rule of thumb approach to figure out the kind of impact that they have on the world, or hope to have. Are they really avoiding harm? Are they looking to benefit stakeholders, or are they going to be focusing on tackling and contributing to a solution to a particular problem? And each of these ABCs, there's no one better or worse or right or wrong, but it's about matching the best approach to the best investor and the problem. But this is a really great rule of thumb as an investor thinking, where do I want to play? Am I just starting with dipping my toe in impact investing, and I can start with perhaps avoiding harm through my investments? Or am I really going to get my hands dirty and look at a particular problem and get involved in enterprises tackling that particular problem? So I found this incredibly useful when interpreting what's going on in the marketplace. And given this theoretical background, as Richard mentioned, we worked with looking at the approach of investors in the Nordics with a report last year. We found many impact-driven investors, but a very small portion of them were really impact-only investors where impact took precedence over financial return. Most of the investors were really looking at getting a strong financial return. And we see this across investors that are either private or institutional, impact-driven or financially driven. That fourth column there around financial reward was incredibly important and one of the main reasons why investors were going into impact. And this statistic summarizes that and goes also into the myth that Mikkel was talking about really going for strong financial returns. And more evidence is coming out. And I think there's some intrinsic logic when entrepreneurs are solving some of our most important problems in the world, that there's a lot of return and money to be made in those problems, especially over the long term. In the Nordics, the three most popular topics are renewable energy, healthcare, and education. And we see many startups leading in that, but the investors are aligned and are expected to go into those three topics. Some of the challenges for the market, as Mikkel also mentioned about the data. I'm not sure if this is a myth or not, however. Some people say that there's not enough data on impact, and I'm not sure if that's true. There's not a lot of data on startups to begin with, and I don't necessarily think that impact startups are unique or more challenging in that. But we'll see, because this year we're launching another survey, looking and asking investors similar but deeper questions around how they focus on the problems that they do and how they approach impact investing in the Nordics. And that's actively running and open right now.
Thank you very much, Rachel, for that intro to impact investors in the Nordics. We'll get back to you and talk a little bit about also what you see ahead when it comes to practices in impact investing. But I want to get back to Tove in Stockholm and start talking a little bit about how do you actually assess those companies, both on their impact and their financial return, and do you really assess them also on a risk-taking when it comes to if they reach their impact targets?
Yeah, absolutely. I mean, we could sit here all day discussing this. This is the hottest topic in the industry, but I can talk about how we do it. And for us, it's I mean, in addition to usual risk assessment that any investor would do, key business strengths and risks, we spend a lot of time on impact risk assessment. I already mentioned briefly the framework that we use, but firstly, we only invest in businesses where the profit and impact are connected. So that mitigates some of the risk in the first place, back to Mikkel's point that you can't stop the impact without turning off the business. One risk that we always focus a lot on is, though, what is the negative impact risk? And when we make the investment, we do a thorough kind of impact assessment, and we actually even have leveled up our own work. So we set impact targets at the very point when we invest. And this is something that the entrepreneurs, it's an iterative process together with the entrepreneurs, but they report to us on a quarterly basis on those impact KPIs, which we also report to our LPs. What's very important to us is that when we invest, we set financial targets as any investor would, but we also set our impact targets up front, which are approved by our investment committee, but also by our advisory committee, which consists of some of the largest LPs. And one of our LPs is actually the European Investment Fund, and they have a great practice, we think, of helping connect your fund carry pool, not just to financial performance, but also to impact targets. So in the end, we're all completely aligned with the entrepreneurs. We only get rewarded if the companies in our portfolio achieve both their financial return and their impact targets.
Do you consider yourself as impact only, or impact first?
No, I wouldn't even say either. I would say both. For us, it's super important that it's both, and it's important not just because we are greedy and want to make a lot of money. Of course, anybody within investments are hoping for that in the end of the day. But what we're hoping to do is to support these companies that are not dependent on donations, that are not dependent on grants, but companies that have business models where they're self-sustainable, so they can actually survive on their own 2 feet, and where there's a true business need and an impact need, and you can combine both. So I wouldn't prioritize either of them before the other. Of course, we would never make an investment that doesn't tick the impact criteria, but we would equally be reluctant to make an investment into a business that is required, whose business model is dependent on donations.
Okay, I think I understand. Nina, what do you say regards to this? When you screen those companies and in the end actually take them on, do you have a impact only, impact first view on this, saying that if you work with the assessment and due diligence of those companies, that you have a financial return rate that they have to meet to be part of your accelerator? Or do you take them on the best impact and then you try to build a company that has a good financial return as possible?
I think that's a very interesting question, Richard, and also to kind of repeat what Tove said, that to us we do both, but we only invest in the startups that are able to provide high financial returns as well, even though we are impact driven, and impact is at the core of Catapult and everything that we do. We are still going into these startups as hardcore investors, right? So we believe that there is no trade-off between doing something good and creating high financial returns.
But do you have a minimum rate on what you look for in financial return, like a interest rate or whatever? Do you have a target for yourself in your portfolio there?
No, so we have targets, what we want the startups to achieve in the years to come, but that it's also a case by case thing. So we don't have one number that we look for and that we evaluate the startups based on before we take them in.
Okay, over to you, Mikkel. I'd like to hear a little bit about on how do you see the Nordic as a cradle for companies with sustainable solutions?
I think that the mapping that we did showed very clearly that the Nordics do have a lot of the prerequisites for being kind of like a stronghold within this. We have kind of like the mindset, the societal knowledge and performance to showcase on doing good when it comes to the sustainable development goals. And also, I especially Sweden, I would say, is really doing a great job, both when it comes to the number of startups per capita, but also when it comes to the ratio between tech startups in general and then having a higher representation of impact startups compared to other countries. So definitely we have the prerequisites. There's still kind of like the challenge of when it comes to the large size of where does all the talent go, where does the scale-ups go, the investments and so on. Then it also becomes a question of the absolute size of the cluster of the ecosystem. And in that respect, I still think that we have some to go in order to be able to have the same size as London, Paris, Berlin, and so on, of course, because of the geographical size.
And
I think,
how do you see our part of the world connecting with other areas of the world that have a strong, maybe not interest, but prerequisites for doing good while doing a good business?
I think that definitely we are quite kind of outgoing. I think that especially kind of like Catapult is a great example of kind of like sourcing from the whole world. I think when it comes to kind of like this outgoing aspect, I think it's a bit surprising for us that only around 1/5 of the companies that we have looked at are actually addressing emerging markets, while the 80% approximately are focusing on the more developed markets, and taking into account that when that the large scale impact tends, of course, to have to be present in emerging markets, then there is definitely something to focus on to see is this something that where we can make an even bigger bang when it comes to the impact part.
Okay, thanks a lot. What do you say, Nina, about that? How do you actually see all those startup and companies applying for your help from the rest of the world compared to the Nordic ones? Are there any differences or specialities or ways to solve those things in the world?
I think that's a very interesting question, Richard. And I think the trends that we see is that at least so things are changing, and the type of applications and companies that we find and the problems that they're trying to solve is also constantly changing. But I think the one thing that we see is that companies that come from outside of Europe, especially from Latin America and Africa is the continent where we have our second largest deal flow from, is that they are developing solutions to problems that are much, if you can say, bigger and severe than the problems being addressed by Nordic startups, if you can put everyone into one bucket. And we see that there is more focus on financial inclusion, health, and education. And in Norway now we also see a lot of these type of solutions coming up, but we see more in terms of mobility, smart city, green energy, clean energy, these type of solutions coming up from the Nordic countries. And we believe that most people in the Nordics, they are already living really good lives, right? We don't have problem with access to food and safe health services and these type of problems. So that is also, for many people, the foundation of how they're finding and addressing problems through the solutions that they're building. But we see that, we have a really strong deal flow from the Nordic countries, and around 1/3 of our portfolio companies are from the Nordic countries. So the quality and the problems that they are solving are also for real.
But everyone is talking about unicorns since many years in tech startups, and now you talk about impact unicorns that should solve a problem for 1 billion lives instead of making a valuation of $1 billion. Do you see that we have such an outgoing and insights in the Nordics that we can actually make solutions that provide a better life for a billion people, or will the ones that are actually in those areas of the world have a better opportunity because they really do understand the problem?
I think there's pros and cons on both of these sides. So what we have here in the Nordics is that we have a general very high level of higher education, and we have the best technology out there available at our fingertips, and we have a lot of capital that we now see are moving into the impact space. So that is kind of building a really solid foundation for actually being able to scale these impact unicorns, or as we are internally here in Catapult talking about maybe it would make more sense to build a stable of zebras instead of just focusing on this one traditional unicorn, because we need so many different type of solutions to be able to solve the sustainability goals. So I think also that's what we're working on here in Catapult, to connecting problems and capital from different parts of the world to make sure that they all equally have the same foundation to actually scale their solutions based on.
Okay, I understand. So we actually have to also bring in money from other areas of the world to work with this. How do you see the last 30 seconds, Rachel, in this talk? What's ahead when you have investor goggles on this?
I think 2 or 3 things that'll really shape the space over the next few years is certainly going to be the EU green taxonomy, the way that all investments are going to have to describe what's green and what's not. If a startup can describe their solution in terms of the green EU taxonomy, then they're already leaps and bounds ahead. Other things such as the Harvard Business School impact weighted accounts, that describes your environmental impact in dollar terms over a year. that's going to change the impact conversation beyond startups and really put a lot of tangible pressure on non-startups and big corporations. So those two things, we've got the data, we've got great ways of describing it. You can't hide behind a business case that is polluting the world anymore. It's pretty transparent, and I think if I was setting up a business right now, I'd make sure that I took these things into account and took advantage of it. Thank you.
Thanks a lot, Rachel, and thanks to all of you joining here, and also thanks to the audience. I'm not sure if the Nordics will be an epicenter, but I'm pretty sure that the Nordics will be in the epicenter, because that's what we've been doing here for 100 years, balancing social and environmental impact with business. So thanks to all of you listening today. Thanks Mikkel, Nina, Rachel, Tove for being here, and continue look at all the great stuff here at Copenhagen FinTech Week. Thanks a lot.
Thank you.